Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, December the 12th, 2022. I am going to start here on the S&P, but what I want to present tonight is an update to my preferred view, and also how we're going to deal with the CPI number tomorrow, what went on in Microsoft today, which added to all of our indexes, because it does carry a heavier weight in the Dow, in the S&P, in the NASDAQ, and also in the Russell. So across the board, indexes had a good day, but I want to also include the alternate view. So I have preferred view I want to update, and I also want to go back and review and include the alternate count. So let's start. I, of course, was looking for the market to continue to go lower today, finish up the minor first wave of this intermediate third wave coming down. That's my current view. And what we got was that it did not come down. It started to rally, and then it rallied hard all through our session on the back of Microsoft. So for a great deal of the session, it was a fight and a struggle. But finally, at about 11 o'clock Eastern, the market was just determined. And then in the last hour, the market just let go and really started to sail high. Now, we had a lot of talk, a lot of discussion kind of swirling around that the S&P always wanted to go to 4,000. Well, it managed to do that, managed to go above it, and managed to close above it. So again, what that does is takes us out of that 4, because that had to continue to go down. Could have put it there, but it had to continue to go down. This is not a part of 4 because you can see the difference of the size. So it just doesn't work. So I backed it up. It does, and I can count, and it's clean to go 1, 2, 3, 4, 5. Put the minor 1 there. A, B, C. Now that A, B, C does cover a lot, but I can first put up the first that we put down there, and that would just be retracements. Retracements for a second wave. So always imagine, right? We get these sudden moves and this sudden explosions, everything all within second waves. So yeah, I was kind of feeling today, come on, you're doing so beautiful and laying this out and walking it down, and it's all perfect, and then you go and you blow it and you change it. So, but not really change it, but in terms of what was following pretty cleanly, we needed additional downside, we would get the additional downside, etc. Today kind of changed that mind. But here is the current update and the view. So if indeed it is still within the context of a minor second wave, there we have 618, which is very common, 4035, 70.5, 4052. Can it do it? Yes. Can it blow above that level? 4410. Can it blow above that level? Yes, actually it can, and that will be covered when I go over the alternate view. But for right now, I'd be looking for this to kind of put its completion point in towards this level. If I can count this correctly on an hourly chart and open it up just a tad so I can see inside where we got from here, this is the roll from the December contract to the March contract. That's what that gap is. If I go and just put on this chart, you could see there's no gap. This is the March contract. So this is that coming off, and this is that going back up via March. That's what I got to deal with now. So that's what we all need to deal with. And here again, that's why I get the A, B, C, B, A here. And I can make it a 5, sloppy and ugly as it is. Or it can be an ABC, and this is the B, and this ABC A, B, and we're in 1, 2, 3, a small fourth wave, looking for something still a higher high before we pull back up, before this is over. Now, let's now just trip forward to tomorrow morning at 8:30 Eastern. We get the CPI. Last time we got a CPI, which was on November the 10th. I'm going to just pull this open. Let's go back to November the 10th. Right there. That was the day that the S&P in 1 minute jumped 150 points. The NASDAQ in 1 minute jumped 508 points. The Dow in 1 minute jumped 900 plus points. Absolute blow your socks off. What are you guys doing type move. And that was based on the CPI coming in 0.1% better than expected. So what you can do is you can check out econoday.com. You can go in, you can look at, they have it listed. You can click on it because you can find out what the consensus is so that you kind of get a little bit of an instinct, a little bit of an insight that, okay, so last month on CPI on a month-to-month basis came in at 0.4%. Now, the consensus for right now for tomorrow's report is that it'll be 0.3%. That is 0.1% better and would be expected because that's what everybody's looking for. The consensus range is 0.2% to 0.5%. So if it were to come in at 0.5%, that's going to be out of line with what expectations are and would cause the market to nosedive. That's my thought. If it comes in at 3, I think we get a pop, but they're already expecting it. So how hard it will be, questionable. Cannot rule out that it'll spike again right up through the roof. Now, 0.2% would be even better than consensus, and this thing goes through the roof. The markets will go through the roof. So again, just keep in mind, consensus for the report month over month is 0.3%, which would be down 0.1% from last month. The consensus is 0.2 to 0.5, so 0.2% to 0.5%. If it comes out of 0.5, that's going to be worse than expectations. It's going to be 0.1% worse. And since it 0.1% better forced this 150-point rally in the S&P and a 500-point rally in the NASDAQ, you would expect maybe the same. And so that could happen. If it comes in at 0.2, that is going to be better than expectations by 0.1, but it's going to be better than prior by 0.2. So I think the market will absolutely go through the roof. Okay, if it comes in as expected, maybe we'll get it more of a muted. A lot of it's already baked in, as they say. I don't know. All right, back to the chart. So when we look at it here on March, it looks a whole lot different. That's on the daily. If I go to the hourly chart, it looks a whole lot different. We don't have that gap. So it's kind of easier to see that as we were going up, it all makes sense. Because March didn't have to gap. March just picked it up where it dropped off, and that started yesterday. So yesterday we had, from where did we, those are all Friday, here. So we started down, floated around, and then they started to rally it. So, but there was no gap. On the continuous chart, this move was up here. All right, so let's continue and go back to just where I have my labeling. So we got the picture. Small 4, we come back up, we get here to here, and then maybe that completes it. Under the preferred view, that would be more in line with what I'm looking for. I cannot and will not rule out that we're going to have a gigantic move again tomorrow based on the CPI. That is kind of what's sitting in everybody's mind as well. Plus, we had this news on Microsoft, and what they did is they bought, I think it was 4% of the London stock market, London Stock Exchange, and they're buying that from Reuters, Thomson Reuters, and another provider of news. And it's like, okay, so now they're moving more into the financial news. They're going to start something. They're going to start their own CNBC or something similar. I don't know. But it was enough to really kind of excite that I think portfolio managers were coming in today because they're now putting Microsoft into their portfolio for a long-term basis. So that's what I kind of thought was happening today. And also bring into that we have a quadruple expiration coming in on Friday, add to what is going on in the stock. So yes, we can definitely or definitively see additional upside, or we could see a little bit more of a correction. But I think that correction comes because they're going to be selling the whole market. I think if we just had to individualize, are they going to start selling Microsoft again? They may, but I don't think it's going to be all by itself. Like today, basically, it carried the indexes higher. So ABC. Now, I want to go over back to the daily. Let's run the opposite, which would be the alternate view. The alternate view continues to suggest that we very possibly have to move that primary wave here, and that we're going to be inside of a primary B wave that's going up. It still could possibly also be an intermediate wave too. So let me see if I can get this thing open. Here we have intermediate wave 1, and then we have ABC. Then I put the X here. I've told you that the alternate view, even under this intermediate wave 2 count, would be that the X wave would come here. Why? Because when I take back down to the hourly chart, it's a 1, 2, 3, 4, 5, clean as a bell. So it's either going to be a C wave or it's an A wave. This one ended up, I labeled it a C wave because we were heading down with some strength. We actually did break it, which gave me a little bit more strength, but then it's a B wave and that could come in irregular, et cetera, et cetera. So it could be A. Now we're talking about, I'm moving the X wave over to here. It ends in a slight failure, right? Because you get an A, a B, and a C. And whether C did not take out the low of A, no big deal. I would accept it because it's just a very, very difficult pattern in a correction. I would put the X there, 1, 2, 3, 4, 5, A, B, C, B. What is this? 1 of C, 2 of C, 3 of C, maybe still in progress. In any case, what am I looking at? And if this indeed is what's going on. So, I got to get along with this labeling. So again, to move the 2, this is an A, this is a B. We're looking for a C wave up to complete that. Where do I go to find that, what that C wave might look like? I take it. Again, we are looking at drawing tools. We're looking at the extensions. And I'm going to go from the bottom of wave, what would be labeled wave A, add drawing extensions. And then I'm going to go up to that high, and I'm going to bring it down to that low. So what are we looking at? If indeed this was going to be considered irregular, then I would really look for the C wave to also jump pretty strongly above 4110. And it gets itself up towards 1.618, which is where C would be equal to 1.618 of wave A. When you're dealing with a little bit of an irregular B wave, that is the level that the C wave can get to. And that is 41.87. But in between, and if this thing takes off tomorrow, right? Even if it's a little bit more muted than it was on November the 10th, but if they decide that they're loving it and they're going for it, or it creates a short squeeze, all in advance of the Fed. So if that number comes out tomorrow in line, either they're going to go like, okay, that's what we were expecting, so the Fed's only going to do 50%, so we're okay. We'll take it up a little bit. And congratulations, whatever, if they get confirmation. Who knows? But I'm just giving you the circle around here on what could be pushing a button to the buy side. So if indeed this is A, this is B, and we're in this C wave, 1, 2, we're in a third. Well, a third could certainly take us above that high and then some. And they could do that on that number. Again, we don't know what now is going to happen when Asia opens and then when Europe reopens, how they want to deal. And then finally, what position this market's going to be in as we get ready for that CPI number tomorrow morning at 8:30 Eastern. So again, keep all these levels in mind. If it continues to break, and I mean, they do a kick butt, huge rally right out of the gate and then continue to build on it, we're likely in the additional alternate view, and that's going to be where we're in this B wave. And if that's the case, let me go out to the weekly. The A would come over here, right? And then we'd be in that B wave. And if that's the case, we go back to retracements and we go to the all-time high. Come on, this is the one I want. And drawing. I'm not sure why it wants to do that. Just straight retracement. And we're going to go down to that low. So on a B wave, what are the ramifications? Well, most B waves will be equal to about 0.50, 0.618. But if this is going to be wave A and we get to count it as an ABC in and of itself, well, then it would be more of a flat. And the flat could take us all the way back up towards those highs, or even give us an irregular, which would put us above that high. And that all within a primary B wave extended rally. Now, I'm not necessarily looking for that, but I would again feel remiss if I didn't include it. So what we're looking at here is if this B gets shifted and it hasn't occurred yet, and that A gets shifted to here, and we're in that B wave. It is much bigger. I am not necessarily looking at it, but I, along with you, hate to be surprised. So I'm laying it all out there. That if something starts to get haywire tomorrow on that number, then yeah, these are the numbers that we can start to check out. First would be this degree, but then you can see how quickly you can throw your own retracements up there. Top to that bottom gives you the retracements for a much larger move up. And that does not suggest at all that that inflation's done, that interest rates won't go back up, that the economy is going to be soaring, that everything is okay. It doesn't mean that at all. Because what comes after that is a C wave down. All right, over to the NASDAQ. I got to run through the same deal here. Again, I'm going to start down using my preferred view that I have right now. And that is, again, exactly like its twin, the S&P. We got 1, 2, 3, 4, 5. There is minor wave 1. A, B in the C wave for minor wave 2. First number that I want to draw is retracements that are going to show us where minor wave 2 can reach. Minor wave 2 seems dead fast to hit the next level, which is 0.618 at 11,869. That would be the first level. Second level we have is 11,931. Now, beyond that, it begins to flip this count to the same as the S&P. So understand that if we get this thing out of the park for whatever reason, number one, please do not fight it. Please go with it. And I intend to totally be flat with no position until that number is clear and the market is clearer in what it's going to do with that number. So play along. If you're carrying a position overnight, one only hopes that you have a stop in and you're protecting. If you have a long position overnight, I hope you put your target in on where you want to get out. All of this can happen very quickly. So that's why I now really don't carry positions overnight, because the ongoing volatility can explode at any given moment. And we have enough things going on that can produce it. All right. And one more thing, and enough energy, enough money in the market that a reaction will have to occur. It has to occur. There's too much money in the market, and they're positioned for what they think is going to happen tomorrow. And if it's all one-sided position on the long side and it ain't what they want, you best believe it's going to be a big switch. If they're all positioned on the short side and it's not what they want to see, you best believe they're going to switch. That's all I'm going to say. All right, so that alternate view coming out to the daily chart would suggest that we're still in that wave 2. One of the alternate views, but we're still in wave 2. And this is, we move the X out to there. This is wave A, this is wave B, and we're in that C wave. Now, what can that look like? So what I want to add now are extensions. And I'm going to go from that low to that high to that low. And now I'm going to take these out, because here we got a couple of places. I'm going to go back down to that hourly chart, right? A, B, we're in a C wave. Where can that C wave take us? Well, 12,102 would be where wave C is equal to wave A. Wow, that's nice. That takes us closer to 12,145, which is where we have the completion point for wave A. If we're thinking that we need to get above that level, what's up next? 12,262, 263 up in that area, 12,315 for this area. So we got where they can complete. Here's a zone, here's a zone, and guess what? Again, we're running against three levels, all surrounding 12,500 to 12,600, just below. So it's all sitting right there. That's how I put them up. That's how you can also do it and be able to do it on the fly, because I'm going to tell you there's going to be a lot going on. The markets are going to be moving, and you got to do on the fly and get on there and get back into business. So 2 retracements, just go from the top of what would be called the A wave to the bottom to what would be called the B wave, and that'll give you retracements for a C wave. But we also know that C can be equal to A, and that just makes it a nice flat, and it kind of could here, because here again, we really didn't go back and drop below that low. So it could be A, B, C, and take us right back to here, and we're done. Put that over there, wave 2. It could take us higher, wave 2, wave 2, wave 2. All right, now I'm going to get rid of these. I gotta, because I'm going to get over to the other alternate. And that is, if this A wave gets moved over to here and this thing takes off, and what I mean by taking off is that it goes. We have another, sorry about that. Let me just get this together. then we have another melt up like we did on November the 10th. And again, that melt up is right here. So again, what it would suggest is that we are moving higher in some form of, I'm not sure, because I'd have to, if this is the A and we're in a primary B wave, it consists of ABCs, but that would suggest that we haven't even really gotten to the intermediate wave A of this ABC up. That may be it, and this could be the B, and then we're really flying, or vice versa, that we come up here, make our high for wave A, come back down in a B wave and still run a C wave as a primary degree. All right, so let's go back out to that daily, and now where we're going to put Fibonacci so that we can get an idea. And actually, I got to go to the weekly again. Out to the weekly, we are doing retracement from the all-time high. And retracement down to that low. Bingo. So here we have B waves, 14,367, 14,914, and on up. If, which I don't think it would be, I'd have to recount it to get the A wave over there to see what that would be, but it doesn't look like it's going to be a, it could be an ABC. And that kind of would mean flat. We should get an ABC flat, but yeah, let the market tell us. So potential is to have it could explode higher. It could explode easily higher, and it could do it on the CPI, or I'd actually do it on Wednesday. So we got to live through this for a little bit. Okay. That is the alternate view, or the second alternate view. Again, a lot will be revealed on how and what the reactions will be and what the numbers actually will be tomorrow and what the market reaction will be, and then what's going to happen on Wednesday. So we shall see. That's today's update. Any questions, please post them in the comment section. I will be reviewing it. Tomorrow, the update is likely going to be a little bit later than you would expect. And I know it's going to be a big and important day, but I have a stress test that I have to go and have done tomorrow. And that's where they put you on the treadmill and you've got to run, and they take all these measurements and they see what your heart's doing, what your lungs are doing, et cetera, et cetera. Well, I've been ordered to take one, and now tomorrow is that day. So, but I will be making an update tomorrow, but it will come a little bit later. I'm going to wish everybody a really great trading day. And the next update will be on Tuesday, September. Wow. Tuesday, December the 13th.